Hello, hello, hello. Good afternoon, good morning, good evening, wherever you're at watching this. This is the Rick and Dave podcast. I'm one of your hosts, Dave Stein. I am a real estate agent, real estate investor, commercial lender, broker, life insurance agent, father, husband, all the things. But the hats sometimes fit, sometimes don't. Nonetheless, here we are today on this blustery day here in North Dakota. I'm joined by my co-host, Rick Boehm. Rick, what do you got?
Hi, I'm Rick Boehm. I'm owner of Enterprise Services, R&K Property Investments. Dave, I am so excited today. If somebody came to you as a ground up construction general contractor,
Okay.
and they said, I could get you zero down ground up construction if you own the property, or you could sell or finance where the seller would take a second. That would almost seem too good to be true, wouldn't it?
1,000,000%. I don't believe you for a second.
Well, we actually can do that. You know, if we've got contractors today that are watching and they give us a call, we can do that for you. And we've got Lidia Hicks here to explain this program, walk us through some examples. And Lidia, welcome back to the Rick and Dave podcast.
Yes.
Tell us about this program, and thank you for coming back. Excuse me. Thank you for coming back to the program.
Thank you so much for inviting me. It's a pleasure to speak with you guys. We are friends as well, and I like to help your podcast grow and also help a lot of people that are here right now. Yes, you're right. It is possible. It took me a long time to find this lender with this vision. They really have a vision for to build America, to rebuild America, right? And that's why they are doing this. They are a private fund, and they can do whatever they want with their funds. Okay, so I would like to share a PowerPoint with you, and I'm going to go over some details, and then I'm going to actually walk you through a case study to see exactly the numbers.
That sounds great.
So the requirements, logical, they are requirements, right? So when it comes to credit score, it's 660 minimum. I want people to know that there's a difference between the consumer FICO and the mortgage FICO. So many times the mortgage FICO is lower than the consumer FICO. So I would say if you want to be sure that you'll be approved, make sure you have a 700 plus. Okay. The second requirement is the net worth. They want to see a 50% or more of the construction amount. So let's say you want to build a house that is 300,000. They expect you to have at least 150,000 in net worth. It means it can be in your house, it can be in rentals, it can be in funds and mutual funds and stocks and anything like that. Okay, so a personal financial statement will explain that. Liquidity, only 5 to 7%. If you compare this with any fix and flip out there or any rental loan, they require about 20% down plus 5% closing. Here is only 5 to 7%, which means if you build a house of 300,000, if you have $21,000 in the bank, you qualify. And I'll show you why. Okay. Next, agreement with a local builder that has done at least 3 similar projects in the past 3 years. And I will add, if it's development, like if it's a whole entire neighborhood, they will require only 2. And if seller finances the land, we need a signed agreement that gives the permission to build on the land, and will take a second position after closing. And I'm going to go over that too. Which means that the majority of the lenders, like 95%, I would say, or 99%, they require the land to be fully owned. Which means can be 30,000, can be 50, can be $1 million. No, we don't know. We are okay if you have an agreement with the owner of the land to allow you to build on it, and he signs in front of an attorney that he's okay and he's going to be paid at the end, we accept it. Because you can't do anything to the land. You cannot take it, rip it apart, damage it or whatever. Makes sense?
Yeah.
And it's just common sense. It's good business. And also, you can JV with the borrower can JV with the land. Say, look, you have the land. I bring the money, and I bring the builder, and we are in a JV agreement, and we split the profits. Or they can become like a bank for them, right? I will finance you, and you can pay me this amount. Whatever agreement they have, it doesn't matter to us as long as you can see the right to build on their land. We're good.
So Lydia, I'm sure you're going to get into this. When we say a local builder have done similar ground up construction, is this residential? Is this commercial? Can it be either?
Good question. So we mostly focus on residential up to about 6 to 8 units.
Okay.
And what we see the most, they can be 20 of them, it doesn't matter, but they have to stay within the residential and maybe smaller commercial, like 6 units or 8 units. Most of them are duplexes or townhomes or single families. Entity documents, they're just normal. The documents from the LLC, driver license, financial statement, 3 months bank statements, experience. And then the property is all about the land, the plans, the plots, the permits. By the way, we cannot close a loan until we have the vertical permit. That is super important. We can do all the documents, pre-qualification, qualification, get all the documents ready, do the appraisal. And then when everything is approved, we can close only when the vertical permit is in place. Make sense? Okay.
Mm-hmm.
The title company, all of these things here, a GC will understand. They're just the normal things that you need about the property. And when we have all of this, we will have an appraisal done. They will take the comps, they will take the budget, they will take the land, analyze, compare, and give us an appraisal report. We go into the second round of underwriting. And once you have the permit, we close. The appraisal is good for 6 months. So
Okay.
If they know they will get the vertical permit in 6 months, I would suggest to do all the work and just be ready for closing. If they think it's far away, sometimes it may take a year, like if it's a development, I would suggest to get the documents done, but wait until they are closer to the permit, to obtain the permit. For a true zero down, the land has to be owned free and clear, or JV or seller finance. That's just repeating the same I told you. If the land is not with a seller finance or JV, they will have to pay for the land. The borrower has to pay for the land because we don't cover 100% of land. We only cover 100% of the construction. Two numbers are super important. So anybody can do the maths just by knowing, what's the purchase price of the land, what is the total budget, and what's the ERV. We have two numbers that will cap our loan. One is 70% ERV, and the second is 85% of LTC, which is the loan to cost value. Whichever is smaller, that's the cap. Let me give you an example. For instance, let's say the land is 100,000, and let's say there's no seller finance and there's no JV, and they have to purchase the land, okay? And the construction budget is 300,000. The total cost is going to be 400,000. And if the ERV is 600,000 in the area, 70% of that is 420. Agree? So that's the first number.
Okay.
85% of the total cost, so 85% of 400 is 382. Which one is the smaller? Is 382.
Yeah.
If you compare it to the construction budget, that's 300,000, so it's plenty enough to cover all the construction. Make sense?
Mm-hmm.
And the land, if it's 100,000, right? If you subtract, so we can only practically we can give 82,000 to the land, but it does have to be approved. So sometimes the lender will say, yes, there's a plus, but we can give it to the land for whatever reason. But if they will be approved, like if it's an infill lot in a big city, they may be approved for that. Make sense? If not, the land is on their own. They have to figure out how to buy the land. They will have 100% construction, and that's the most important. That's a guarantee. I cannot guarantee about the land if they don't buy, if they have to pay out of pocket for the land. Okay, what else? So let's go back. Imagine that the land is 100,000, but is not, doesn't have to be paid at closing. There's zero cost for the land and no down payment for the ground up construction. Make sense?
Yep.
Do you have any question about this?
Yeah. So, Lydia, my first question is, how common is this? Because I think when we talked before we started recording, or maybe even when we started recording, you said it took you a long time to find a lender that does that. So how common is it for, let's start with the construction, 100% construction. How common is it for a lender to cover 100% of construction costs?
100% construction actually is pretty common, but there's a problem with that because usually is a Dutch loan. So they may give you 100% construction, but you have to read the fine print, like what am I paying interest on? Am I paying in the whole entire amount, which is called Dutch loan, or am I paying only as I draw? That's a huge difference. Imagine you borrow $1 million. If you pay 1% a month in $1 million, that's $10,000 every single month. If you pay only what you draw, if you draw 100,000 every month, you pay 1,000 the first month, 2,000 the second, 3,000 the third, right? So people have to pay attention. Ask the question: is this Dutch loan or non-Dutch loan? Right? So 100% construction, it is common, but when it gets to the land and the type of payments, that's the difference, you know.
Okay.
And there are a couple of more differences that I'm going to show you right now. Any other questions about the numbers?
Not for me.
Not for me either.
The beautiful thing is this. Usually what I saw, if I compare my borrowers from fix and flips and the borrowers for construction, they make by far the most money and the less work because they work
For
with
sure.
professionals. Literally, you hire a professional and you don't mingle. You just don't let them do their work. You know, it's like someone comes to fix my plumbing. I'm not going to go help them and micromanage them, see what they're doing, right? Because they will guarantee the work from you. I give them the land, they give me the key, literally, you know?
And just to, can we go back to that for a sec? Just to review, because I know people will go to each slide and they'll start. This slide actually has $18,000 due at down payment. That is because let's just review why
Yeah.
that is.
If they have to pay for the land, yes. If they have to pay for the land because there's no JV agreement or seller finance, then if the land is approved to be financed, they will come up with 18,000. If not, they will have to come up with a whole entire 100,000.
Yeah.
Make sense?
Very good.
Deferred payments. This is something that now it goes from the 100% lenders to the 90% of them that will give 100%, ground up construction. Deferred payments is almost like non-existent, which means, do you know how hard it is to pay monthly payments when you're not making money? Right?
Yeah.
Where are you going to get that money from? So this limits how many people can actually do ground up construction. It limits to people that have maybe a W-2 that's big enough to cover those payments, or they have rentals, but it's not for beginners, or it's not. Honestly, I met people who have a lot of, huge net worth and still have problem with paying the down payment because they are net worth, rich and cash poor because they always invest the money, right? The money is not supposed to. So when they see the deferred payments option, it's just amazing because they don't have to worry about paying one penny while they have the loan. Okay.
That's
And not only
amazing.
this, the closing costs are deferred. Even my fee, the broker fee, is paid by the lender. Is that much of confidence in their underwriting? Okay. So the lender pays the brokers, And the closing cost is added to the loan amount. And it's paid when this property gets refinanced or sold. And the monthly payments are 1% of the total draws. Like I said before, if you have 300,000 and you need 6 months to build, you'll draw 50K every month, right? The first month, $500 will be added to the loan. The second month, you get another 50,000. Now you have $1,000 that month added to the loan. The next month, 1,500, 2,000, so forth. When you finish the construction, if they cash out right away, then we're done. If they sell it, they may have to wait 3 months, maybe 2, until they sell, and they will pay the full amount, right? 1% of the full amount for the remaining months. Make sense? And all of those are added to the loan. Seller and lender, if the seller finance, the seller of the land and the lender are paid at the end. And if development, so if we have, when you have a development, we don't give $20 million upfront, right? It will be divided in phases, $1 million, 2 or 3 or 5 per phase, depending on the experience, the proven experience. If they can build 10 houses at that same time, then we give them money for 10. In order to move to the next phase, they will have to cash out refi or sell 50, 60% of the loan, pay back, and then take another one. So they still can have a balance while they take in the next phase.
Okay.
Questions on that?
So Lydia, if they're doing 10 houses, is it better to do one loan for each house, or is it better to do one loan for the 10 houses, or is it specific to the general contractors?
Good questions. It will be one loan. It's gonna be like a blanket loan for as many houses they proved that they could build in the past. Make sense?
At once.
Because they know, yeah, at once, yeah. And then they will divide the land in, they will subdivide the land, and they will take only that portion of the land. Make sense? So this way, they can still have the remaining land to do whatever. They can sell it, they can, because if you add the loan, the land to the loan, it may mess up the numbers if you add the whole entire land. Make sense? Let's say you have 10 acres. If you add 10 acres there, the number's not gonna work. So we have to subdivide and take the first 1 acre or 2 acres for the first phase. Make sense?
Yeah, that makes sense.
So you can have the numbers work. This
Lydia,
is, yes, questions?
you might get to it, but two things that are on my mind.
Mhm.
Any states that this doesn't work in, and interest rates. So maybe it's in your presentation, but
Yes,
just want to get out there.
You see, I put 1% because it's 12% a year, 1% a month. Being a short-term loan, we don't like to talk about 12% because they may not keep it a whole entire year, right?
Sure.
It's 1% per month.
Okay.
If they finish fast, some people build in 4 months, cash out refi, 4%. That's it.
Yeah.
You know?
That's amazing.
Okay. Yeah. This is an example of a loan for a first phase of a development. They have, let me remember how many houses there are here. Maybe 5 houses. No, there are more. I don't remember how many, but look at this. What's most important is this. Cash injection, 0. That's the most important thing, right?
That is so cool.
Beautiful.
Yeah. That's 0, and that's the closing cost.
Mm-hmm.
And as you can see here, so that's what they want. They want to see, the net worth and the two numbers. In this case, was 75% LTV because they are very experienced. Okay, normally we'll go to 70 LTV and 85 LTC. Makes sense? But if there are people with a lot of experience, they will go up. You see here, 15 lots, 300,000. I think it was each house. So now I would like to just to write some things here. Let's take a case scenario, or if you have any questions. So let's recap. So land is not that difficult to get someone to either be your financer, like a bank, right?
Mhm.
Or JV. It's not that difficult. Let me tell you why. Because land is not sold like the fix and flips. There's a lot of competition on the fix and flips. What I saw lately, and people asking me, have you noticed that in fix and flip they don't make any money? Yes. Everything I have on my desktop right now is like 83% LTV. Make sense? So how much money is left to make when you have to pay 2 closing costs? No, you pay about 5-6% when you buy, 5-6% when you sell. That's 12%, right? Do the math. 83%.
Right.
It's left, 27.
That's not,
Yeah,
yeah, not a lot,
17.
not a lot
Yeah,
of
not a lot of money, very little money. And then on top of this, what I saw, I've seen cases of issues with what's the name? With the structure, with the foundation. I had clients that had to completely demolish the whole entire house. I had hidden issues with mold, all kinds of things, the pipes, so you don't have any surprises, and nobody's fighting for the land. You know why? Because it's not that easy there's a process. You have to know how to entitle the land, how to get the vertical permits, and you have to do some work. Make sense?
Mhm.
And because of this, you can really go ahead and, look for land and negotiate and say, look, you're gonna wait for with this land. I can buy it from you. I can show you. We can actually bring them a offer, to show the landowner. I have the money. I have everything. I have the builder, and you can make some money with me. Make sense? So it's much easier. Questions?
Lydia, can we go back to the credit score? If
Yes.
there, if the general contractor doesn't have the 660 or 700 personal score, how can they possibly partner up with someone else, or maybe partner up with a landlord to get credit score up?
Yes, absolutely. You know what's good? When it talks about hard money, we are asset based, okay? That's what it means, right? So it means that whatever you don't have, you can borrow. Bring a partner. You don't have net worth, bring a partner. You don't have a credit score, bring a partner. Whatever you need, bring a partner for that what you're missing.
Mhm. Lydia, I'll go back. Are there any states this lender does not lend in?
Good
Or is
question.
it nationwide?
Not really is nationwide, but most important in the state is the location.
Okay. Is there a population requirement?
Yes, usually we like to see at least 25,000. 50K is even better. Okay. If it's infill lots, absolute, guarantee. And what I recommend is always go backwards. So you are a real estate agent. You understand that. You go back. First of all, you look at the comps first.
Sure.
You see the comps, you go in the middle, you calculate 70% of that. Let's get an example. I highly recommend to stay under the FHA limit of that particular county. Those are secrets, guys. If you take in consideration all of this, it's gonna be a success, okay? Because a house that is above the FHA limit, it will not sell as fast because you have to put 20% down. You limit the pool of buyers, right? If it's under the FHA limit, they only need 3.5%. And guess what? What would you buy? Would you buy a brand new house or a 20 years old house? No brainer, right? Everybody would go for the new house if they can afford it. Make sense?
Always. Yep.
And yeah, so you're gonna look at the FHA limit in the county. And I'm not sure if you can give me an example but in Oklahoma is about 500K. Okay, so let's take Oklahoma. 500K, my limit. And let's say I have the comps for it. First, I'm gonna look online to see where I have those comps because I want to make the most money I can make, right? I look at the areas where I have those comps. I call a realtor and I say, hey, find me a land in these zip codes that I want, that I have high comps, okay? I will pay your fee at closing, but give me a seller finance. Work with me on this. You're gonna get paid at closing. I will highly suggest, if there's a realtor involved, to pay them at closing, because there's no reason for them to wait, all the way to the end. So now we go backwards. Let's say we have the land, we have the seller finance, and it's 500,000 that comes. We're gonna multiply this by 70%, and we get to 350. My land and the house have to fit in this, right? We go backwards. And let's say if the house costs, so if the budget for the construction is usually about 250 to 300, then I still have about 50K, 200K to buy, for the land, to pay the land at the end, to pay the interest, and to pay for bringing the sewer, the electricity, whatever I need. Makes sense? There are some costs connected to the land. So that's that. So location is super important. Now I have another surprise. Okay, we have another strategy for lower population. Yep. Okay. So if it's a city, we're good. Okay, we can build based on the comps. But what happens if I find land outskirts is a nice area, but people there live in manufactured homes?
Oh yeah. Mm-hmm.
There's so much land outskirts, and there are no comps for the beautiful homes, right? People they have a different lifestyle. They like more space, outside, more acreage, but they want to live in a nice house, but to not pay a lot of money for it. I work with a dealer, it's a nationwide dealer, and he can provide brand new manufactured homes, beautiful, with beautiful, finishing and granite countertops. And I forgot to bring some pictures, but anyway, they're beautiful, beautiful, beautiful. And they're only somewhere between 120,000 to 200,000. And you can always sell them for double.
Oh, wow.
We have this manufacturer provider vetted already. And let me tell you the surprise, not just that we can do this, so it is 25,000 or less, okay?
25,000 or less, is that for
the
that's for
population, yes, okay. So what they can do is this. So the lender can actually pay. So you know how the draws work. You have to have your money and then you get reimbursed, right? Okay. In this case, because it's a national vendor that has 30 years plus on the business, right? The lender will pay upfront 50% of the cost, okay? And then will also pay 50% at delivery. So the borrower is not using his money to buy and then be reimbursed like a regular draw works. Because of the reputation of the manufacturer, the lender will do business straight to the manufacturer.
Lydia, I instantly thought of someone that could probably benefit from this. So you and I will need to connect afterwards.
Yes, I know.
But how crazy, and it's kind of the beautiful part about our group, our community. Once you break the mold of just the traditional go to the bank, there are so many options out there for borrowers, construction folks, real estate investors. So I had a couple questions. Well, first, you asked about FHA limit in Hurley County, where Rick and I are at. It's just under 500,000, so about the same.
So about the same.
And then just to clarify, people can get conventional loans that don't require 20% down. It's just kind of the rule of thumb that a lot of folks strive toward, right? That would you rather put down 3% or 20%? Me,
Yeah.
I would always put down 3 if I could.
Absolutely, yeah. And then 2 years later, I can move and get another one for 3% and rent this one, and it can go right. Okay, are you ready for another surprise?
Yes.
What about
My brain
experience?
can't handle any more surprises.
Yeah, okay. So let me tell you, I'm a broker, but I want to invest too. And guess what? I don't see myself doing fix and flips.
Yes.
I don't see myself doing multifamily because it requires a whole entire team, a lot of things.
Yes.
And always they ask for experience, which I don't have. So how can I begin and get
Mhm.
into this? Guess what? With our lender, you can have zero experience, okay? And you can literally piggyback, the builder's experience without, that's super important, without having him signing the loan. You go to another lender and you ask for that, they will say the GC has to be in the loan. You don't have experience. The GC does not have to be in the loan or the builder. The builder has no responsibility of the loan. That's not guaranteed, okay? So the builder does not have to sign. They do have to give a builder's guarantee, okay? Which means I will finish this house from A to Z and give you the key. That's what it means, okay? And what's interesting is that I have an investor without experience. He has some fix and flip experience, but that doesn't count because fix and flip is one and this is something else, right? So I asked my lender, what happens? Do I need to include the builder? And he said, no, we just need the guarantee. Now the builder said, okay, I will give you my guarantee, but I need to get the money. I call some lenders, guess what? Nobody wants to give the money directly to the builder because the loan is in the name of the borrower.
Mhm.
How do I solve the problem? I went back to my lender and said, would you be willing to pay directly to the builder? Because that's what he wants. He said, absolutely. I don't even do the business with the borrower. If you trust the builder, I do business with the builder.
Jeez.
Okay?
So cool.
Yeah, now it goes to the builder. More things. I mean, if you want to build a house that is 300,000 and you only have 20,001 required, how is it going to happen? I was thinking, it's too little money. You have to draw every single time you use $20,000. Make sense?
Mhm.
Guess what? They require so little because they also upfront 50% at the beginning and 50% at the end of every single purchase to national vendors. For instance, you buy doors, you buy windows, you buy roof. All of this costs money. The borrower does not have to upfront the money. The lender will. Because
That's crazy, Lidia.
yeah, because otherwise they will need much more money, right? 20,000 is not enough. What are you gonna do with 20,000? Yeah, they will upfront the money. Okay, for everything national vendors, it will be paid to them straight. Okay, so it'll be 50 upfront, 50 at the end. Okay, then one more thing. What about the draws? The draws usually, back then, I mean, even now, you need to have an inspector coming. You need an appointment and they will come, they will analyze and get back to you. It's something like 7 days kind of thing, 4 to 7 days.
Mhm.
They took care of that too. They have a 360 degrees camera. And literally all you do is the GC has the camera, connects with the lender, with someone that works for the lender, like a evaluator, and they just see everything, sends the money. We help people save 4 to 6 weeks of waiting.
Oh my
Okay, that's
gosh.
super important. Yep,
Right.
it's not just the money. So that's in a nutshell, and I'm super excited. So yesterday I had a conversation with someone that is doing a development in Dallas, and they have investors line up. So their strategy is this: they buy the land, they develop the land, they build, and then they have investors ready to invest, cash out refi, and they invest and lease, and they make money passively. So they have to pay for the land about $3 million. They were paying now, logical. They use the money from the loan. They got a loan from a bank, and now they owe $3 million. And their new lender for the vertical was asking for $4 million down. And they found about me through somebody. And I said, you don't need that $4 million down. Use this $4 million, pay this guy off, pay this bank off, and come with zero with us. She was like, no, this is too good to be true, you know? It's like, it is. That's how we do business, you know? So if need be to have to pay for the land, get investors for the land portion. Get them in a JV, buy the land, and then the rest, we can take care of the rest.
Lydia, is there a minimum or maximum that you come across yet?
The minimum is 100K. Good question. Maximum is 6 million per phase.
Per phase.
Per phase, yeah. So it can be a $20 million project. We'll split it and we'll give them as many phases necessary, you know.
I cannot wait, Dave. We Rick and Dave need to enable people to build these home developments. And if you're watching this, reach out to me and Dave. And our numbers are up on the screen. Reach out to us and let's get this money back into communities and get this stuff built. And this is going to be an exciting time. This is a program like I would have dreamt about this, when I was younger. I mean, this is
100%.
a fantastic program.
Yeah, I agree. I love it.
And when we think about, what happened in 2008, the delay, like the reduction in construction that happened after 2008, which is now amplified into our quote unquote housing shortage.
Yes.
This can be a possible, it won't fix the whole problem, but it can certainly help a long way for folks to start building more homes more effectively, more cost effectively. And I mean, some of the builders can then ramp up their production. Or again, you mentioned, Lydia, you're interested in investing.
Yes,
getting
absolutely.
investors into the game to want to reinvest in the communities. It's just so cool. I'm still blown away, and I'm waiting for your last surprise, Lydia. Like, I feel like you built me up. You gave me all these surprises, and there's got to be one more. But
I don't have anything more like surprise, but I do have an advice. Okay, if someone gets a loan for land development, be very careful with something. Okay. Lenders that give you money for land development, if you don't use their vertical development loans, they will require 100%, they will have 100% penalty. So true case, okay? So someone came to us and said, can you help us? Can you help me refinance from this loan here? Because they were paying about $60,000 a month on a $6 million loan. Can you help us refinance from here, move there? No, for two reasons. Number one, it's hard to do mid-construction appraisal. Okay, that's one. And so this lender doesn't do it. And secondly, I called the lender to ask all of the penalties, if they have any penalties, and they said 100% on the land. Okay, so the land was $2 million. If this borrower wanted to cash out refi and continue with another lender, they have to pay $2 million penalty. So watch out and read your fine print.
Jeez.
When you have to buy the land, I would highly suggest either you have your own money, either you do seller finance, like I mentioned before, JV, or bring private investors, because this is what can happen. And the problem is, there are two problems there. One was the time. They were running out of time, so he had to cash out refi to not be foreclosed on. Make sense? Yeah. And the second thing, do not go for luxury houses, because luxury homes, there are two problems with them. Number one, they are above the FHA limit. Number two, they are custom design homes. So logical, you don't know what people want in their house, right? It's $1 million home. They want different material, different rocks, different everything. So now you have an extra $100,000 to $200,000 per house that you have to put, and the lender, no lender will approve anything extra that was already approved in a scope of work. Make sense? So now you have to come up with that money from your pocket. Practically, you're gonna lose that money from what you thought you're gonna make, and get into not be able to finish the project. So stay away from luxury home unless you have already you build one, you already have the buyer, and they tell you everything you want. Make sense? So that's all. No more surprises.
Yeah, you're dang it. Your buyer pool is so much smaller when it comes to luxury, even at a lower purchase price, right? If you have a luxury home, but it's 500,000 compared to 350, and building a luxury home for 350 is kind of a stretch anyway. But yeah, your buyer pool is just so much smaller, and if it's, as you mentioned, if it's custom, then what I like and what you like, two different things.
Yeah, for that I highly advise to work one-on-one. The person, the client can get their own funding from the bank. Make sense? And then it's kind of pre-sold. Yeah, that's have to be very wise.
That spurs another question. I wrote down target audience or target client, like ideal client. Who for this program? What do you think is like the ideal client? Not to exclude anyone, but who's the bread and butter?
First of all, GCs that always work for others, not for themselves.
Okay.
Agree? Okay. Builders that right now, I'm very grateful to everybody that builds. I understand how difficult it is, and how much work they put into, and they are overwhelmed with paying monthly fees.
Mm-hmm.
Every month, every day is a lot of money, and it just doesn't feel right. So it limits them how many projects they can do, right?
Yeah.
If they don't have to pay monthly, then they can hire more people, do more projects, right?
Yeah.
It's the sky's the limit. And then investors that are tired of doing fix and flips and they barely make any money, competing every day for the few homes that they find. And then the people with zero experience, and they have a W-2, and they don't know anything about fix and flip, but they want to do real estate. And they can just hire a vetted, we're gonna vet the builder, definitely. They hire a builder, they find the land, and they can just continue working their W-2 and have an investment real estate at the same time. And they can keep it, sell it, whatever they want, which is me, which is us, Yeah.
Amazing.
Dr. Lydia, man, I am so thankful for you having you on today. I cannot wait to work with general contractors. And if you're a general contractor and you're watching this, please take the time to reach out to Rick and Dave. Our contact information will be up here. It's on our YouTube channel itself. We want to work with you. And I can't wait to bring this to via meetings and talk to people.
For sure. Yeah, absolutely. Gosh, I'm so thankful, Lydia and Rick, that we spent the time today to talk about this program. I can't wait to share it with everyone.
And I do have to add one thing. We don't need taxes for W-2. That is important.
Gosh, stop.
It is super important, right? I was looking to this. Yes, it's asset-based. So if they work or not, or it doesn't matter to us.
Now,
Awesome.
can they use tax return or W-2 as like if they don't have the assets?
We
Okay.
we are purely asset-based. But remember, whatever they don't have, they can
Partner with.
partner with. Yep.
Yeah, for sure. Okay. So
Right.
perfect. You like read my mind. Lydia, how do they get a hold of you? Obviously, Rick mentioned that our stuff's on the screen. We're on all the social medias. Lydia, we're excited to share this with the world. Rick, any parting words?
I prefer them to contact you guys because it's your podcast, and then we'll work together to help them to get along.
Yeah, I guess just we all work together. And
For sure.
if Rick I guess if you're looking to reach out to me, I'm available. Enterprise Services has their own web page. I've also got my own individual. You can reach me individually on Facebook. I'm on LinkedIn. I'm also on Instagram. How can people get a hold of you?
Yep, right over here. You can scan this guy. That's my Instagram handle. Occasionally you see the names up on Zoom, but you search Dave Stein Realtor and something should pop up.